the ultimate reversal and continuation trading strategy that will make you $6,720. In this video, I will show you a reversal trading strategy that can help you make more money and prevent you from staying on the wrong side of the trade. If you follow the steps in this video, you will be able to consistently make money. In this video, I will show you the exact strategy and criteria for an entry signal. I will show you examples of a long and short position. I will show you where to set your stop loss. And finally, I will backtest this strategy at least 100 times to show you the win rate and profit gain. Warning, following these steps can make you a lot of money, but nothing in this video is financial advice. Trade at your own risk tolerance. First, what is a reversal and why does it happen? You ever notice how price just keeps falling and falling, but eventually and suddenly we hit a bottom for price to quickly recover and go the other way? What if I told you there are clues on the chart that indicate when this will happen and that we can take advantage of this to make money? One method is using the relative strength index, which I'm sure most of you already know what this is. However, we do not use the RSI to look for overbought and oversold levels like many traders are doing. Instead, we use something called RSI Divergence, or RSI Hidden Divergence. You see, RSI Divergence is of two types. There is regular RSI Bullish Divergence and RSI Bearish Divergence, and the same goes for Hidden Divergence. RSI Bullish Divergence is when price is making lower lows, while RSI is making higher highs, indicating a reversal is coming to the upside. An RSI Bearish Divergence is when price is making higher highs, while RSI is making lower lows, indicating a reversal is coming to the downside. However, a bullish hidden divergence is slightly different than a regular bullish divergence. You see, a regular RSI divergence is a reversal pattern. It tells you prices will flip the other way. While a hidden RSI divergence is a continuation pattern, it tells you prices will continue in the direction that it is currently in. An RSI hidden divergence is when price is making higher highs, while RSI is making lower lows, telling us that price should continue to make higher highs for a continuation to the upside. The same is true for a bearish hidden divergence, which tells us that we should have continuation to the downside if price is making lower lows, while RSI is making higher highs. As you see here, we clearly have a bearish hidden divergence, which led to prices to the downside. Now, ideally you want to use these two. In combination when trading, you look for a continuation in the trend by identifying hidden divergences, whether to the upside or downside, and once you spot a reversal using a bullish or bearish regular divergence, or use that opportunity to either exit the trade or enter a new trade for a reversal pattern. Please take a moment, like the video, subscribe to the channel for more content. If you want us to make a video on a specific strategy, leave a comment below. The strategy is simple. First, you identify an uptrend or downtrend. You can do this in two ways, using trend lines or a moving average like the 200-period exponential moving average. If price is above the 200 EMA, then we are in a long-term uptrend. And if price is below the 200 EMA, we are in a long-term downtrend. Here's how to trade this strategy. First, if price is above the 200 EMA, we look for continuation to the upside by looking for a bullish hidden divergence. However, if we identify a regular bearish divergence, then know that we should have a reversal to the downside and you should exit the trade. Similarly, if we are below the 200 EMA, we look for a continuation to the downside by looking for bearish hidden divergence. And once price forms a regular bullish divergence, then we look for a reversal to the upside. Let me show you an example. But before we jump into a real example, do you want all the tools needed to win in trading? Many traders are losing money because they are not equipped with the tools necessary to make them a successful trader. If you click on the link in the description, you can get access to our Trading Express Mastery that will give you lifetime access to 7 different trading strategy indicators, 200 plus cheat sheet charts, and much more. Now back to the strategy. First, to trade this strategy effectively, you need to have a trading plan. You need to know what your criteria is to enter and exit a trade. In this case, our criteria is when we see a bullish divergence for a buy signal and bearish divergence for a sell signal. Or you can use just hidden divergences for continuation strategy or a combination of both. Now back to the strategy. Next, we need a stop loss strategy, where we set our stop loss in case the trade does not go as planned. There are many different techniques to set a stop loss. One is to use the previous swing low, or you can use a moving average, or an average true range as your stop loss. Finally, you need a risk management strategy. How much are you willing to lose if the trade hits your stop loss? Are you willing to lose $100, $200, $500 per trade? Each of these factors need to be determined before you start trading. In this video, I will use my entry criteria if we see a hidden bullish or bearish hidden divergence. Our stop loss will be set at the previous swing low for a buy signal or previous swing high for a sell signal. We will be risking 3% per trade with an initial capital size of $10,000, meaning we are willing to lose $300 per trade if our stop loss hits. We will use a reward to risk ratio of 1.4, meaning if we are willing to lose $300 per trade, we have a potential reward of 1.4 times that, which is $420. We will be testing this strategy on NVIDIA stock and on the 5-minute time frame. Now, to test this strategy, I will use our custom trading indicator that will automatically backtest the trades for us, so we don't have to manually backtest. It will enter and exit the trade based on the exact criteria we just mentioned. The long signal will trigger when prices are above the 200-period EMA, and a bullish hidden divergence occurs for a continuation to the upside, and a short position will trigger when prices are below the 200 EMA, and a bearish hidden divergence occurs for a continuation to the downside. First, to get access to our indicator script, click on the link in the description below. Next, copy and paste the script into the Pine script section of TradingView, and click on the settings icon to change the inputs. After putting all the inputs for the strategy, click OK, and the indicator will automatically backtest all the trades that meet the criteria we are looking for. The indicator script will display this custom dashboard, and as you see here, we have a win rate of 51% with this trading strategy. Even though the win rate is just 51%, this is still a profitable strategy because our reward to risk ratio is 1.4, since we are risking $300 per trade, but winning $420 per trade, and since our wins are more than our losses, meaning we should expect to win 51 trades and lose 49 trades out of 100 trades, then we can expect to profit after 100 trades. Let me show you the math. 51 trades at $420 gain after each trade is $25,620, and 49 trades at $300 loss is $14,700. Therefore, the difference is $6,720. So after 100 trades, you should expect to make $6,720, or 67.2% of your initial capital size. Also, as the custom dashboard suggests, we should expect to find 100 trades every 4.82 months. Making 67.2% in less than 5 months is an exceptional strategy. It outperforms the buy and hold S&P 500 strategy, which only gives an 8 to 10% gain per year. We can go back and look at each individual trade from the backtest and see when it took buy and sell positions and analyze the losses to improve the strategy. As you see, this strategy works great on the 5-minute time frame with the NVIDIA stock. However, if we change the time frame, will this strategy still be profitable? Well, let's change the time frame and see the backtest results. We can change the time frame to the 4-hour chart. After changing the time frame, the indicator script automatically backtests all the trades, and as we see from the custom dashboard display, that it is indeed profitable even at the 4-hour time frame. Also, we have an even higher win rate than we did on the 5-minute chart, with a win rate of nearly 58%, and can expect a profit gain of 115% after 100 trades. However, to find the 100 trades, it will take you a much longer time period compared to the 5-minute chart. This strategy triggers more on lower time frames. Thanks for sticking with me through this ultimate reversal and continuation trading strategy. If you follow the steps, you'll be well on your way to making smart, profitable trades. Remember, nothing here is financial advice. Always trade within your own risk tolerance. If you found value in this video, be sure to hit that like button, subscribe to the channel for more strategies, and drop a comment if there's a specific strategy you'd like to see covered. Also, don't forget to check out our Trading Express Mastery, packed with indicators, cheat sheets, and tools to help you become a successful trader. Until next time, happy trading.